Proprietor mortgages are one of my absolute favorite things to talk about, probably because a lot of people don't understand what it is. They've never heard of it, or it hasn't been explained to them in the best way. So today I'm going to just talk you through joint borrower, sole proprietor, the mortgage option that many first time buyers don't even know about. So the key things are you can increase your affordability. So if you're trying to purchase a property and you're not quite making it there with affordability, then this can help you. It can protect the first time buyer stamp duty. This is another reason why a lot of people use this product, and it can help you get help from your parents. So your parents can help. Do they have enough equity in their home? Is their home paid off? What is their age? They'll be on the mortgage, but not the deed. And adding them will increase your buying power, which means that you may be able to buy sooner than you thought you'd be able to buy. So make sure that you watch this until the end. My name is Anthony Lindsay, and this is going to be really informative. I love joint borrower sole proprietor mortgages and talking about them, not only because I do them quite regularly, but because it can be life changing. But make sure that you remember, as with any type of mortgage, that you do need to speak to a qualified professional and that your home may be repossessed if you don't keep up the repayments on your mortgage. My name is Anthony Lindsay, and I've been in finance for over 30 years. I've done wealth management, I've done collections, and I've done lending. Why is that important? Because it means that when you're talking to me, you're not just getting information about the product, but you're getting support with whatever you're looking to do, and also just a wealth of knowledge that has been built up over decades. So, what is a joint borrower sole proprietor mortgage? A joint borrower sole proprietor mortgage is essentially a mortgage where you have an individual who maybe doesn't have the affordability to get a mortgage by themselves, and then they have someone who's willing to go on the mortgage but not on the deed. So there's some key things that you need to remember. Number one, you will be the legal owner, but the payment responsibilities are joint, everybody that's on that mortgage. So the things to keep in mind, as I said, 100% ownership of the property for the person that's on the deed. You can add up to 3 additional people to the mortgage. So up to 3 additional, it depends on the lender, and all borrowers are responsible for the monthly payments. And this is a key point, because although the other people are not on the deed and don't have any legal ownership of the property with joint borrower sole proprietor, they do have responsibility for paying the mortgage. So you need to make sure that you're working with someone who you trust and who trusts you, and that you have a really solid exit strategy. Why do people use joint borrower sole proprietor? So there's key reasons why people use joint borrower sole proprietor. Number one is a joint borrower sole proprietor mortgage can help if the borrower by themselves cannot afford the mortgage, or they don't meet the affordability. And it can keep the property in one person's name. And this is important. Some people use the joint borrower sole proprietor mortgage because maybe the one of the people on there already has a property, and therefore they don't want the second property stamp duty. Now, I'm not advising that you use it for that purpose, but this is one of the reasons why people will use a joint borrower sole proprietor. So you might have a couple where one of them already owns a home and they're now coming together, they're getting married, and they want to buy a home together. But what they don't want is the additional stamp duty. So speak to a solicitor, make sure that you're using this product in the right way, because I have a lot of clients that come to me and want to use JBSP to avoid stamp duty. But when they're calculating what the stamp duty actually would be, it's either non-existent or it's nominal. So speak to a solicitor, make sure that you understand the product and that it's being used for the right purposes. But it's a great product for the right purposes. Who can help? Now, this is going to be something that is going to be dependent on the lender. So each lender is going to have different criteria when it comes to joint borrower sole proprietor. So some lenders will allow close friends. Some lenders will only allow a blood relative, so a parent or a sibling. This is why speaking to a mortgage broker is so important. You want to make sure that you're speaking to someone that understands the products, but most importantly, understands your individual circumstances. Siblings are good because most lenders are going to allow you to use a sibling, but also you have to keep in mind that age matters. So when you're looking at someone to get on the mortgage with you, joint borrower, sole proprietor, make sure that you're aware of some of the restrictions around age or maybe the other person's credit rating. Key things to remember: a joint borrower sole proprietor mortgage can be fantastic and it can help, but everyone should understand the responsibilities. So, as a joint borrower, you're legally responsible for the mortgage. So, if the other person stops paying, you're responsible. Their income is assessed, but also their outgoings. Their existing commitments are considered. The mortgage may affect their future borrowing. And as I said, age matters. So, what does that mean? In short, when you are talking to someone about doing joint borrower, sole proprietor with you, you have to make sure that you understand that their age can affect the length of the mortgage and therefore impact the monthly payments. There are some lenders that do what's called dual term. So they'll take the oldest person and put a shorter period against them and the younger people a longer period against them to calculate the payments. But you need to speak to your mortgage broker about that because not every lender does that. The other thing that you need to take into account is yes, you are adding the other person's income, but you're also taking into account their commitment. So, for example, let's just say, you're going to put a sibling on there, and that sibling who lives in another household also has a mortgage. For the sake of ease, let's just say that the sibling has a £4,000 income per month, but their mortgage is 2,000 per month. The lender is going to take away that 2,000 and other living expenses. So you want to speak to a broker. You want to do the math before you proceed with this, because although it's a great product, it does involve some calculations which you can do in advance. So make sure you speak to your broker. The other thing that you want to keep in mind is that it may impact their future borrowing. So it may impact their future borrowing. It's important to understand that with a joint borrower, sole proprietor mortgage, that it will impact the other person's future borrowing because now they have a mortgage responsibility on their credit file. So although they're not on the deed, they do have the responsibility to pay the mortgage in the event that the other party does not pay the mortgage. So you want to have that conversation up front and make sure that it's understood. As the owner, it's a great thing because, again, you get on the property ladder a lot quicker. But the things that you want to keep in mind are that it keeps you with the legal ownership. So you're the legal owner. You will benefit from any increases in the property, but it's also your responsibility to maintain the property. So you benefit from the fact that it's all in your name. You benefit from any increases in the value of the property, but you're also responsible for the maintenance. And the other person on the mortgage, even though they're not legal owners, they're responsible for the payments if you do not make the payments. And it can impact their credit and ability to borrow in the future. So, great product. Make sure that you talk it through. Make sure that you understand the features. Make sure you understand the pros and the cons of the joint borrower sole proprietor mortgage. The key takeaways are every lender has different criteria, which is why you want to speak to a mortgage broker in advance. There's only one legal owner or set of legal owners. Usually, the joint borrower sole proprietor mortgage is used for a couple. So let's just say me and my wife, and one of us has a parent who's willing to go on the mortgage. So as a couple, we'll be on the deed and the parent will be on the mortgage, but will not be on the deed, which in some cases, that's actually the problem. So if you're doing it with a sibling, or maybe you're doing it with a close friend because the particular lender does allow that, the other person kind of does have a risk in the sense that they have no legal ownership of the property, but they do have a legal responsibility to make the payments. But if you've talked it through, if you've watched videos like this with them, then they'll be clear and they'll understand. The other thing that I would say, make sure you do always speak to a broker before you get started. Don't go directly to your bank. And I'm saying this, and obviously it's a little bit self-serving, But the reason why you want to make sure that you go to a broker and speak to a broker rather than going directly to your bank when you're doing joint borrower sole proprietor is because your bank may not even offer the product. And if they do, there may be limiting circumstances. So, for example, they may not allow a close friend, or they may not do what's called dual payments or dual terms. So, you may have an older parent that's maybe in their 60s, which means that the length of the mortgage would be really short if you're doing it all based on the oldest person. And keeping in mind that when you do a mortgage, the criteria is always based on the worst person. So let's just say, you have amazing credit, your partner has amazing credit, but the parent, for whatever reason, doesn't have good credit, then the credit profile or the criteria will be based on the person with the worst credit. So by speaking to a mortgage broker, you'll be able to find the lender that has the product that suits your needs. It's a must. Always speak to a broker first. So those are the key things to remember when you're doing joint borrower sole proprietor mortgages. My name is Anthony Lindsay, and what I'm going to be doing now is explaining right to buy and how you can combine right to buy with joint borrower sole proprietor. A lot of people don't know that you can actually do that because most lenders do not do it. So I'll say that again. Most lenders do not do joint borrower sole proprietor on a right to buy purchase. So that's why you want to make sure that you're speaking to a broker who knows how to get it done and won't charge you up front. Never pay up front, especially with products that are unique and have maybe a little bit more complex criteria, because you might find that you pay in advance and then you don't end up with the product or service you want. Make sure you watch all the way to the end and make sure you like and subscribe. I'll be right back and I'll be talking you through right to buy, the process, and how you can do right to buy along with joint borrower sole proprietor. Always keep in mind that your home may be repossessed if you don't keep up the repayments on your mortgage. My name is Anthony Lindsay, and right now, what I'm going to do is I'm going to go through the right to buy process, how you can use right to buy along with joint borrower sole proprietor, and some things to look out for. It's important that you understand the product, and it's also important that you understand the pros, the cons, and the things and questions you should be asking before you proceed. So, first and foremost, what we want to know and what we want to understand is how can you combine joint borrower sole proprietor with a right to buy? And the answer is yes. Many right to buy applicants still don't meet the lender's affordability requirements, even after using the right to buy discount as a deposit, because yes, you can use the discount as a deposit. A joint borrower sole proprietor mortgage can help you bridge the gap by allowing family members to support the mortgage without becoming owners of the property. So this is the big thing. Yes, you can use joint borrower sole proprietor with the right to buy scheme. It's very useful, especially in London, because a lot of my clients, they have very expensive properties because it's in London and they do have a good income. However, they still fall a little bit short even after they've applied the right to buy discount as their deposit. So they're not coming out of their pocket for the deposit, but even with that, they still fall a little bit short and they need the extra boost on affordability. So they combine the joint borrower sole proprietor with the right to buy scheme. It's a great thing to do and a great thing to consider. So what I'm going to do now is explain the right to buy process and how the two can be linked. But most importantly, understanding that you don't want to wait if you think you can qualify for the right to buy. So make sure that you start the process early. The right to buy scheme allows the many council tenants to purchase the home they live in. They can use the discount as a deposit. They can buy the property they already live in and build long-term wealth. That's probably one of the reasons why I love right to buy so much. I do them probably one or two per week. And the best thing about them is the right to buy, if you purchase that right to buy property, can help you build long-term wealth. So you've lived in the council property, you've been paying rent, and now the council is giving you the opportunity to buy that property. It means you don't have to uproot your life, you don't need to change your kids' schools. You can actually buy the property that you're living in. And as I said, and as a reminder, you can use the right to buy discount as the deposit. I would say 8 out of 10 mortgages that I do for people with the right to buy, they don't come out of their pocket for any deposit. Some have money saved up, so they want to add a little bit more to make the payments lower or something along those lines. However, they don't have to do that. They choose to do that. So if you're buying a right to buy property, do remember that you can use the discount as the deposit. It's always important to remember, as I said, that your home is at risk if you don't keep up your payments, but don't wait. Make sure you get started. So the first thing that you want to do is contact the council. Ask them if you qualify for the right to buy discount. Even if you don't think that you do qualify, just reach out to them. The worst thing that can happen is they say you don't qualify, which is where you are right now. But I would say just give it a try, even if you don't have the finances together yet, even if you don't think you'll qualify for a mortgage, reach out and get the process started. In November of 2024, the council right to buy discount changed drastically, and a lot of people were caught off guard. So don't wait until there are other changes in regulation before you start the process. The other thing that I would say, and I always say, speak to a mortgage broker at the very beginning of the process. I have a lot of people that started their right to buy process and got really far down the line and then came to a broker only to find out that there's some things that if they had tweaked 4 to 6 months ago would have meant that they could have got a better rate on their mortgage. So don't wait. Some mortgage brokers I know don't like to speak to people until they're ready to buy, but I'm not like that. I love to speak to people when they're considering, when they want to understand how mortgages work, which is also why I do these videos. And quickly, make sure if you're watching this video and if you're getting value, make sure you like and subscribe and share it with people. The great thing about the way that I try to present this information is I give you the facts. I'm not going to pressure you because I'm just some guy on YouTube, but you can get the information. Then even if you're not going to work with me, you can go to another broker, you can ask the questions and make sure that you're able to make an informed decision. Don't get your financial, legal, or medical advice from TikTok or YouTube. Always make sure that you speak to a professional who understands your personal circumstances, but don't wait. What you're going to want to do is speak to the mortgage broker, clean up your finances, which by speaking to the mortgage broker, he'll identify anything that might be problematic. And you can also determine who should be on the right to buy application. I've seen it time and time again where people have started the right to buy application and not had the right people on the application, which can be problematic because in most cases, the people that are named on the application also have to go on the mortgage. So I've seen people who maybe had a child living with them and was eligible to be on the application. They didn't put them on the application. Then when it got a little bit further ahead and they maybe didn't reach the affordability and they're not going to look at joint borrower sole proprietor, but they could have added their child to the mortgage. Because the child isn't on the application, then they're unable to add them to the mortgage and it can be problematic. So always speak to a mortgage broker, consider who could be on the right to buy application and make your decision based on that. It's a very important decision and it's not something that you should do without full understanding of the mortgage process. The council will then arrange an independent valuation. And this is a valuation and not a survey. They'll calculate your right to buy discount, and then they'll issue an offer which confirms the market value, the discount, and the price that you will pay. So once the council has given you that letter or assessed the affordability, this is when you're going to move to the next stage. But you want to remember, it's a council. And especially right now, as of the filming of this video, a lot of the councils are backed up because of the recent changes. So it may take a while. Time is on your side, but don't wait. Make sure that you've started the process, make sure that you're asking the right questions, and make sure that your broker is involved with the structure of what you're doing in advance so that they can give you the best advice and you can structure things in a way that's going to get you the very best mortgage to purchase your right to buy property. Once the council has given you those figures, so now they'll send you a letter that will tell you the valuation of the property, the discount, and therefore how much of a mortgage you need. This is when you'll go back to the broker, and the broker will be able to go through some of the figures with you. And this is important. And the reason why this is important is because now that you have the figures, we can assess the affordability. And affordability matters. Affordability counts. This is where we may realize that you actually need to do joint borrower sole proprietor along with the right to buy. Or it may be where you decide, well, I'm a little bit short, so I want to put some cash in along with the council right to buy discount to lower my mortgage amount or lower my monthly payments or shorten the term. But by speaking to a mortgage broker at this point, they're giving you information. There's no applications at this point. There's no credit checks at this point. It's just looking at products that you will qualify for based on what the council has come back and told you. So this is a very key stage to get your broker involved, even though before you even started the process, you should have contacted a broker that they can tell you who to have on the application and how far out you might be as far as affordability. The huge discounts that you get on council properties are great. And if you're up north, it may mean that you're able to buy with just one person on the application. But if you're in London, like I am, the property prices are a lot higher. So having that conversation with the broker to check the affordability is going to be vital. So make sure that you do that. Make sure that you understand what's going on. The other thing that you want to understand is why right to buy mortgages get declined. There's key reasons why the mortgage application get declined. I see it all the time, and most of it could have been avoided if you had the conversation early. So, number one, lenders do not like rent arrears. So, if you can't afford to pay your rent, how are you going to pay a mortgage? So, as a responsible lender, the lenders won't want to lend to someone that cannot afford the mortgage. And this also ties into CCJs, defaults, missed payments, payment arrangement, anything that would indicate that you are under pressure with your finances, and questionable properties. This is the other thing to keep in mind. What I mean by questionable properties, a lot of council right to buy properties are a little bit older, or they may have open balconies, or they may not have fire risk assessments, or they may have cladding issues, depending on when you're watching this video. So this is the other reason why you want to get a broker involved early, that they can assess the actual property. So it may not be that you don't qualify for a mortgage. You may be perfectly suitable. You may have a great credit rating. You may have the affordability, but the lender might look at the individual property and say that this is not mortgageable. If you speak to a broker very early, they'll be able to do the research and look at the property and see what lenders would actually lend on that property. Because you may find that although you as an individual qualify for one of the top tier lenders, the property itself is not a property that they would lend in. So you might need to go to a specialist lender. So this underscores and emphasizes the reason why speaking to a broker early and assessing what you're going to need to do is important. As I said, the CCJs and defaults, that's a no-brainer. So make sure that you're not missing payments, you're not going on payment arrangements. But if you are, make sure that you're open and honest with your broker, that they know these things in advance, that they can put you with the right lender. The entire process can take months. And sometimes time is on your side. So it may be that you do have some late payments, you do have an unsatisfied CCJ, but you can clear those things well in advance of actually starting the mortgage application. So I have clients who they started the application, months ago, and it took a year or a year and a half to actually get the mortgage. And that's not because of them. That's because you're dealing with a council, and the councils are overwhelmed. So the things that you want to do is improve or maintain your credit score. So if you already have a good credit score, make sure you maintain it. If you have small things that you're paying out on, quite often it's better to pay those things off than to have money saved up. So if you have £10,000 in savings but £3,000 worth of credit cards bills, make sure to just pay off the £3,000. It will save you money in the long run. Save as much as you can to make sure you understand the budget, because there are other things beyond the deposit that you'll pay for, and don't miss deadlines. I see this frequently. People's lives are busy, and I understand that. Life happens, we have families. But the thing with a right to buy process is there are some deadlines. So the council will give you deadlines on certain things. Don't miss those deadlines. And if you feel that things are dragging on, always stay in contact with the council, keep them updated. If you need additional time for things, speak to them and make sure you document your conversations. I've seen people who have just fumbled the ball by not following up with the council, and then they miss the deadline, and then they say, oh well, it's the council's fault. But maybe the council had sent them some type of notification and they didn't see it or they didn't receive it, and you could be losing a lot of money on the right to buy discount. So make sure that you follow up, make sure you set time aside to fill in the mortgage application. It's really important that you use the time that is on your side to benefit you and make sure you get the very best mortgage. The big mistakes that I see people make when they're doing a right to buy. I'm going to explain that. And I want to spend some time on this because this is really important. Remember, your home is at risk if you don't keep up the repayments on your mortgage. And make sure that you watch until the end because this point is really important. And I see people make the same common mistakes that could be avoided if you just listen up. Yeah, so my name is Anthony Lindsay, and I'm going to be talking you through the mistakes that people make on a right to buy application. First thing is not thinking about all of the costs. So, yes, you may be able to use, or in most cases, you can use the council right to buy discount as your deposit, but there are other costs involved. So, you want to make sure that you budget for these costs. What are the costs? One of the costs will be my fee, the broker fee. I do advise that you use a broker and don't go directly to your bank simply because, especially with a right to buy, there are a lot of moving parts, and your bank, as amazing as they may not be able to offer you the mortgage on the property. So, whilst you might be a great mortgage candidate, that specific property may be problematic, and therefore you will need to speak to a broker that can assist you with that. So make sure that you're speaking to a broker, you're being open and honest, because the top mistake that people make is that they don't calculate all the costs. So they don't think about the fact that you may have to pay solicitors' fees, not only your fees, but the fees of the lender, and application fees, valuation fees. There are fees that are involved. Some of them come out of your pocket, others are paid through your solicitor. Not having the right names on the council right to buy letter. So the council right to buy application in a lot of cases must match the mortgage application. So if there are three people on the right to buy application, the RTB1, then there need to be three people on the mortgage. So if you had talked to your broker before you started the process, you'd have been able to assess who needs to go on that letter to make sure that you can match the affordability requirements to get the mortgage. So make sure that the right people are on the application, because this is one of the big mistakes that people make. And you can't just add a name to the application. It has to be there when you file for the original right to buy. Going directly to the bank, as I said, make sure you use a broker and paying broker fees up front. It seems like it's a very popular thing for people, instead of speaking to a mortgage broker or qualified professional, to get their information from TikTok, YouTube, Instagram, places where a lot of the times the people that are giving the information are not licensed professionals. They're just internet influencers. I'm not saying that the information that they're saying is broadly incorrect, but what I'm saying is the information may not apply to you. So you need to speak directly to a mortgage broker or a professional, explain your specific circumstances, explain what you're looking to do, that they can give you a bespoke solution to what you're looking to do. So getting your information offline or from friends or from family members can often lead you down the wrong path. So speak to a mortgage broker, whether you're doing a right to buy mortgage, joint borrower sole proprietor, or any kind of mortgage. Make sure you speak to a licensed professional who understands your circumstances and can explain the pros, the cons, and will not charge you up front. The reason why I stress that is even well intentioned mortgage brokers, if they've been paid up front and then for whatever reason are unable to get you the mortgage, then you're just stuck because you've paid for something that you didn't get. So we work a little bit differently. The way that we work is we don't charge any fees up front. We show you the mortgage that you should qualify for in advance. Once we get you the mortgage, that's when you pay. So you pay an application fee after you get the agreement in principle, and after you get the full mortgage offer, that's the time when you would actually pay the broker fee. So there's no risk to you. You do want to work with a mortgage broker who's going to take the risk off you and put it on them. So they should do the work and get you the product or service that you need and then charge you. Another set of mistakes that people make is not reading and completing documents or missing deadlines, not gathering the documents that the lender has requested. I'll cover those two things off together. We live in a world of ChatGPT, AI, and short form content. So frequently, people don't read the documents that are sent over to them, or they say they'll get around to it. Bad move. Make sure that you're reading the documents. And if you're working with the right mortgage broker and the right solicitor, if you have any questions, they'll explain it to you. Never sign anything that you don't understand, because by signing it, you're saying you understand it. You can't then come back and say, well, I signed it, but I didn't understand it. Take the time to read through the documents, set time aside to complete the documents, and make sure that you're aware of any deadlines that are involved. This is not an emotional thing that you're doing, in the sense that you can't just go back to the broker or to the lender and say, I missed the deadline because my cat was sick. The deadlines are the deadlines for a reason, and they want to make sure that you move through the process quickly. But the mortgage and the mortgage process can only be as fast as the slowest person. And in my experience, the slowest person does tend to be the client, not intentionally, but because they haven't put time aside to complete the documents, read the documents, maybe book a follow-up appointment to understand what they're signing. So make sure that you set the time aside. It's a really important tip, and it can help you move your mortgage forward quickly and get the right product. Another thing to keep in mind is being open and honest with the broker. And some people speak to the broker too late and they listen to friends and family. So, again, let me just break that down. Being open and honest with your broker. I've had so many situations where someone has come to me for a mortgage. We've started the process. On the first conversation, I always ask them some key things. Do you have any late payments, missed payments, CCJs, defaults, payment arrangements? And they may say no. As soon as I see their credit report or see their bank statement, it's easy to discern that maybe they weren't being completely open and honest. Some people are embarrassed to say this, or some people, if I'm honest, are just trying to hide it. Don't do either. Be open and honest with your broker. And here's a good tip. If you don't feel that you can be open, and if you don't feel that you can be honest with the broker, then you're not dealing with the right broker. Most lenders do have a consideration that people are people. Sometimes people miss payments. Some people may have CCJs, particularly with parking tickets and mobile phone bills. And so that's kind of baked into the cake. So they understand that. But they don't like not to be told. So that's something called disclosure. People want to be told. So the bank wants to understand what's there. They don't want to find it. And a good broker will find it anyway. And you just want to make sure that you're on the right product. You don't want to get far down into the process and then find out that because you had a payment arrangement that you didn't disclose, you're unable to get a mortgage with that lender. So you've wasted 3 weeks, a month, and then you're placed with another lender, which we would have gone to in the first place had you told me the information about the missed payment CCJ or the thing that was on your credit file. Listening to friends and family is always problematic unless your friend or family member is a licensed mortgage broker and you've given them all your details. Don't listen to them. They may have had 3, 4 mortgages in the past. They may be property investors, but they don't understand your circumstances, or they're not licensed professionals. Yes, it's good to have them to bounce ideas off, but I would say don't get your mortgage advice from someone who's not a licensed professional, who doesn't understand your individual circumstances. And here's why joint borrower sole proprietor and right to buy is an absolute game changer. And one of the reasons why I'm so excited about the fact that you can do both. Many tenants can afford the monthly mortgage payments, but don't meet the lender's affordability, sometimes because they didn't have the conversation early enough with the broker. But by combining the right to buy discount and the joint borrower sole proprietor mortgage, buyers can be able to use the right to buy discount instead of the cash deposit, increase the borrowing power with the support of a family member, keep ownership in the tenant's name, get on the property ladder quicker. So yes, it's an amazing thing that you can combine right to buy and joint borrower sole proprietor. But the key thing, as I said, is making sure that you speak to a broker early. The summary of the mortgage process. So let me just explain the mortgage process because quite often people assume, especially brokers, that everybody understands how it works. So the mortgage process is not rocket science. It's not a dark art. First and foremost, you're going to get an agreement in principle. The key thing to remember is that an agreement in principle is not, in most cases, a credit check, and it doesn't always take into account all of the criteria. What I mean by that is you can go to a broker and get an agreement in principle. But if the broker has not assessed all the criteria behind the agreement in principle that they're doing for you, then it might not be worth the piece of paper that it's written on. And what I mean by that is when you do an agreement in principle, it asks you information such as salary, time and country, outgoings, but it doesn't validate the information you put in. So I could do a mortgage application for myself or an agreement in principle and say I make £5,000 a day and I have no credit issues because it's just asking you yes, no, and to put in the data. It could then produce an agreement in principle. However, when you go to get the full mortgage or when you complete the full mortgage application, this is when it's going to ask you for bank statements, pay slips, P60s, proof of identification, etc. And this is where I find that a lot of clients get duped. So they speak to a mortgage broker who's more focused on getting the agreement in principle than checking to make sure that the agreement in principle will convert into a full mortgage offer. Because when you're buying a house, let's be honest, you're not looking for a mortgage and you're not looking for an agreement in principle. You're looking for the keys to that property. And anything that's going to prevent you or delay you getting the keys to that property is useless. So make sure that your agreement in principle is fully assessed against criteria. But the first step is getting the agreement in principle. The next thing is evaluation. I like to explain this to people because it's a valuation and not a survey. So the lender will do a valuation, which is them saying, this is how much we think the property is worth. There's three outcomes that you can get from the valuation. The lender may agree with the purchase price that either the council or the seller is given. So they may say, we've agreed a £450,000 purchase. We feel that the property is worth £450,000. You're good to go. The other thing that could happen is they could come and say, we feel that it's worth more than the £450,000, which might sound like a bonus. It is problematic if the disparity is really high, because if someone's selling a house on paper for £450,000, but the lender says it's worth £650,000, that's going to raise a lot of red flags. Doesn't happen often, but that's another outcome that you can get, that the valuation comes in higher. The third one, this is the most problematic one, is that the valuation comes in lower. If it's £500, £1,000, then it's not a big deal. But if the valuation comes in considerably lower, you will need to revisit the product that you're going after because it might impact what's called loan to valuation. So the loan to valuation is the amount of money that you're borrowing versus what the value of the property is. So if when they do the valuation comes in really low compared to the offer price, it may knock you out of the particular product that you're getting. Once the valuation comes in, if everything matches up, that's when the underwriting happens. If you work with me, we do the underwriting in advance. So that means we've already collected all of the items we need to validate what you've told us to ensure that your agreement in principle becomes a mortgage offer. So the underwriting is when the lender will ask for pay slips, bank statements, proof of residence, visa, whatever. This is when the the lender is saying, well, yeah, we decided that we would lend to Mr. Smith when we did the agreement in principle. He looks fine. But now let's look at the property. And this is important when you're doing a right to buy purchase because some lenders will not lend on certain properties. So this is why it's important that you talk to the mortgage broker. They've done their research in advance. But the underwriting usually takes about 10 business days, depending on how fast you move, how fast your broker moves. But it's about 10 business days. Once the underwriting is complete, you get the full mortgage offer. This is the most exciting part of this part of the process because now the lender has said, we'll lend to Mr. Smith. We're okay on lending on the property. And here is your mortgage offer. The mortgage offer is usually good for about 6 months because in the UK, as of the recording of this video, they are looking at changing this. But as of the recording of this video, the mortgage process takes 4 to 6 months from the time that you get your mortgage offer. 4 to 6 months from when you get your mortgage offer. This is why it's also important that you do your due diligence, you gather your documents in advance that we can try to make sure that we move very quickly. Once the mortgage offer has been produced, you as the buyer and me as the mortgage broker, pretty much most of our job is done because the rest is then with the solicitors. So the seller's solicitor will talk to the buyer's solicitor, or if you're doing a right to buy purchase, then your solicitor will talk to the council and they'll do their bits and pieces. I would say that if you're dealing with the council, this part can take a while, but as long as you meet the deadlines for producing what you need to produce to the council, if it does take a while because the council is moving slow, it's fine. But what I would caution, I've seen people, they get the mortgage offer, then they go out and they start to purchase things and, take out loans. Don't do that. Keep in mind that the mortgage is not complete until the mortgage is complete. So the mortgage is not complete until the mortgage is complete. So just because you may have a mortgage offer from a lender, it doesn't mean that the whole process is complete. I've seen situations where in that time between the mortgage offer being produced and the exchange and completion date, clients have gone out and taken out large loans. It could knock your affordability out because if the process takes too long and maybe the mortgage offer expires, they may reassess your affordability. So maintain good credit, keep your payments up to date, do everything that you were doing prior to getting the mortgage offer. Keep that up. Obviously, you want to just keep that up, but certainly don't think because you have a mortgage offer, you can flip things around and stop paying bills. So once you have the mortgage offer, you then go to an exchange and completion. Thing to keep in mind in the UK, this doesn't really apply to right to buy, but in the UK, a mortgage is not legally binding with the seller or with the buyer until very late in the process. So there is a process called gazumping, which again, they are looking at. So gazumping is essentially you may go out to buy a house, you have an offer accepted, you've done the full mortgage application, the offer is accepted, everything's moving forward, and then the seller decides that they're going to sell to someone else who offered them more money. You can avoid this if you're working with a good broker who will ask the right questions and make sure that things are moving quickly, but it's not legally binding until very late in the process. So do keep that in mind. That's basically the mortgage process, very quickly explained. But if you're working with a good broker, what will happen is they'll walk you through this, they'll hold your hand, they'll answer your questions, and never feel that there are any silly questions. I do this every single day. And when I was buying one of my first properties, there were certain parts of the process that I'm never involved in. So I had questions about them. So if you're a doctor, lawyer, physicist, rocket science, it doesn't mean that you understand how mortgages work. And you should always be able to ask questions of your solicitor. You should always be able to ask questions of your broker. And you should never sign anything that you don't fully understand or doesn't reflect what it is you're actually trying to do. Here's what you're going to need for an appointment for me or any other broker. So make sure you start to gather these things in advance because, as I said, what quite often happens is the purchase or the deal is delayed because we're waiting on the client. So first you're going to need 3 months bank statements and 3 months pay slips. So that's 3 full months. If you're paid monthly, then you would just need three. If you're paid weekly, then you would need more if you're paid bi-weekly. But three of the most current months, bank statements and pay slips. If you have multiple accounts that you transfer money between, then you're going to need all of those accounts. Your credit report from Check My File. Make sure it's from Check My File, not Equifax, Experian, or TransUnion, because Check My File is going to give you all of the information about all of your credit files, proof of identity, proof of deposit if you're buying a property and maybe you're not doing right to buy, and the name of your solicitor. So these things are key and these things are important. But let me explain why they're important and how to make sure that you get them quickly. So 3 months bank statements. Most lenders or most banks do have an online portal. You go in there and you produce 3 months bank statements, not transactions. So the difference is your bank statement will have your name, address, account number, etc. at the top, and it will be a statement of transactions in and out. Do not print off the transactions and mistake that for your bank statement, because lenders need the full bank statement with your name, address, account number, etc. on it. 3 months pay slips. 3 months pay slips are very important because this is how they assess. Maybe you're paying student loans. Make sure that you're paying right national insurance, etc. So 3 months pay slips. Most lenders don't accept screen prints or JPEG, so make sure you're printing it from your employee portal. 3 months bank statements, 3 months pay slips. Check My File is vital. Not every broker is going to ask you for your Check My File credit report. The reason why we ask for the Check My File credit report is because the Check My File credit report is a combined credit report. Many people don't know this, but not every lender reports to every credit reference agency. When you look at your Check My File credit report, you might find that on Equifax, it said that in January of 2025, there was a late payment, but then on your TransUnion, it says February, and then on your Experian, it says you didn't miss anything. So what you want to do is get your Check My File credit report, go through it thoroughly, make sure everything is correct. Proof of address, you're going to need the proof of address. You can't use a bank statement in most cases for proof of address. You can't use any document that you've used for something else. Proof of address is usually a utility bill, council tax bill. It's not a mobile phone bill. It's not anything that you've used for something else. Proof of your identity. Most of the time, it's going to be a passport. And here's the thing, and this is the bit that can tend to hold things up. For proof of identity, you're going to provide a passport. If you are on a skilled worker visa, you also need your S code, your share code. So we know that you can get a mortgage in the UK. But when you're providing the documents, they have to be good quality. What I always ask people, and I advise them, is that it's usually going to be better and easier to get it by scanning it. Trying to get it in your phone, you're going to get glare and blur, and most lenders aren't going to take a poor quality. So I'd say scan it, put a sheet of A4 white paper behind it, make sure there's 3 inches of white space all the way around the document. So proof of identification would be your passport and your driver's license. The other thing that you can get, if you can get your P60, get your P60. And another important thing at this point that a lot of brokers will not express this early, make sure you find a solicitor early. So if you work with me, I will refer you to 2 solicitors. I will find one and produce a quote for you. I'll refer you to our preferred solicitor. You don't have to work with our solicitor, but whatever solicitor you're going to work with, make sure that you find them early. Make sure that you're comfortable with them. And the reason why this is super duper important is because with mortgages, things move really slow, then they move really fast. If you're purchasing a home through a estate agent, once your offer is accepted, one of the very first things that they're going to ask for is your proof of your solicitor. They're going to ask for your agreement in principle. So make sure that you have those things in hand and ready. Don't start trying to find a solicitor too late, because it's going to cause problems for you. So get your solicitor early and make sure that it's someone you trust. And my name is Anthony Lindsay. I make these videos to explain things in detail. These are not short clips and 30-second TikTok videos. I want you to understand how things work. I want you to improve your financial literacy. So if you found this useful, please share this with friends and family. It's a really small channel, so every subscriber helps. And the other thing is, if you do reach out to me, you reach out to me. If you call that number, I'll pick up unless I'm with a client. So be sure to make sure that you share this, like this. If you have a topic you'd like for me to cover, make sure that you put that in the chat. I do respond. My name is Anthony Lindsay, and I appreciate you watching. And I have some other videos, so make sure you watch the other videos. And if you do need to make an appointment, you can just call me, or you can use the QR code to book an appointment. I don't charge for the conversation, and I'm always here to answer your questions with no pressure, no hacks, completely compliant, and I'm here to support you and your family in your property journey.